Scott, thank you very much for the introduction and conducting all of the preliminary services. Will you do me a favor, remind me again, what was the percentage of people that were subscribers versus not? I just missed it when I was doing something. I know the percentage of people that have TI Pro Premium.
Yeah, it's 71% subscribers to 29% non in today's room.
Okay, perfect. Absolutely perfect. Okay, with me, usually, is my trusty sidekick. Can I get a what from the trusty sidekick?
I'm not crawling out from under my desk. What's happening, Dan?
It sounds like you literally are crawling out from under your desk. You want to get that headset and, Maxwell Smart headphones connected.
I'm all squared away. Anyway, I can see your screen. You sound good. Happy Wednesday.
Happy Wednesday, my good friend. As I mentioned to you, we're going to be having a fantastic show. It's going to actually be a little bit different today because we are really going to talk about some important applied kind of things relating to succeeding as an investor. Just a very quick disclaimer, Trade Ideas is not a registered investment advisor. Everything that you are going to be hearing today should not be construed as formal investment advice. This is for just educational and informational purposes only without any solicitations to buy or sell any securities. Okay. You're here because you're involved with Trade Ideas, and we happen to be the fastest growing fintech and subscription based services as it relates to what we are doing. You can see how we're doing. We're doing very well, and we're doing well because of the information that you're going to be listening to. Again, I want to spend less time on the slides today and more really talking about the critical thing, but this is a great segue because it talks about just what's going on today. Investing successfully, and virtually anything you really do, is a way by which you process information. And today, the way information gets processed is significantly more efficient and data-driven than it was, and maybe I should say electronically data-driven than it was back in when Brad and I and many of the other Trade Ideas members started investing, where it was very human-driven, meaning like it was the analysts and the relationships analysts had on the trading floor with various people that sent orders to them. That really has changed because the time from which information evolves, like happens, to when it gets disseminated has gotten so short. But again, but not in a crazy way. You'll see what I'm saying. It's just that the old school is not able to do it. So what we mean by that is that all of this is about trying to understand behavior, and the traditional ways of like talking to somebody on the phone and hearing their voice, and when he says, hey, I don't think this stock is a buy, like that kind of stuff. Brad, you know what I'm talking about there, right? That doesn't work.
So yeah, I picked that up. Thanks for the inside tip.
You got that. I like that. But by the way, what I'm saying there, that's real. People used to do that. This is not a buy because, hey, it's recorded. So let's jump right to it. I've been around doing this forever. Brad has too. He's not nearly as handsome, but he's older. So together we bring a significant amount of experience to the table in terms of just speculating and being in the market successfully. And we realized that the only viable approach to this information processing is really the same approach that a card counter would do in Vegas. See, in cards, I mean, of course, and to some extent poker, of course, but in blackjack, it's really, the cards and how you interact. And from the point of view of data, the behavior is really a plus-minus system. In poker, you can see what the other person is doing. You can look at them physically and hope that that gives you a tell. trading is a little bit of both. Okay, but the best way to do it is to have the numbers behind you versus randomly just guessing visually. And that's really what we're all about. So one of the things that I really wanted to touch upon today is this, and I know that Steve Gomez, I think, brought it up in his webinar, and it doesn't get nearly enough attention. And there's generally a fear of it. But Brad, you know what we're talking about here? Do not fear selling first.
Yeah, we're talking about going short, right?
Going freaking short. So listen, you know, there's one simple reason why we do really well as a business, okay, is partly because we do help you do both things. Not only go long, which everybody can do, but you kind of need the skill set of going short because, as we have pointed out, the market goes through periods where the short side pays off. And if you are not prepared to do that, well, then you're going to suffer greatly because the market doesn't give a shit that you don't know how to do something. It's just going to do what it's going to do. But I really love, Brad, this point of view, okay? Because what is a short seller doing? If you don't, you know, some people really they focus too much on the fact that you're betting against or negative. But that's really not the case at all. Okay, short sellers are simply processing information in a different way. Think of it that way. You know, whatever information that people think, for example, is Tesla profitable or is it not profitable? Well, it doesn't really matter because the question is, how is the market going to interpret what it does? And by the way, while Tesla can get away with doing something like what it's doing, Brad, we know many companies that can't even come close to doing what Tesla does. So the lesson there is there's no specific rule that says, well, because EPS is this and PEG ratio is that and, you know, beta is this, then this stock is going to do that. That's not how it works. So the reason we want to talk about selling short today is because we want to open up just the whole spectrum of the fact that the short side has its own behaviors and they're really interesting and they're a little bit different than the long side. And I want to talk about the other really critical thing as it's going to relate to this, which is delayed gratification. Okay, so let's move on to the next slide, which is really very important here. Remember, and most of you hopefully are taking advantage of it since the large percentage of everybody in this webinar already has access to trade ideas. We are doing a constant live stream, very holds fort from open to the close basically, where a whole community of investors in our trading room is utilizing best practices in our technology and showcasing to everybody without pressure of having to subscribe to anything how it is done. So that's really the only thing I have to say about that. This is the link. If you're not doing it, it's free. I have no idea why you wouldn't do it. And if you aren't aware, then I'm here to make you aware. So Brad, now that we've done that, let's minimize and kind of jump right into it. What I want to do real quick is before we get into trade ideas and you know, all the different things, I want to just pull something up real quick because Brad, you and I have talked about this. So speculation is an art, you know, and done well, it rewards immensely. Okay, so here is the stock chart of a company called Broadwind Energy. It's wind and it's energy. It had run up from $3, roughly speaking, to $5, was very volatile, you know, testing, consolidating, and then really starting one of, I would say, Brad, one of the best moves this year just in terms of purity, you know, like look at that beauty.
Yeah, I know this particular stock was alerted several times in the AI through that bullish
we had it in the 6s, in the 7s. I mean, it was showcased often.
But you can't fall in love, right?
Well, absolutely. But again, let's take a step back. Even though Brad, you know I love the Tubes. It's a great song. Don't fall in love. She's a beauty. 1 in a million girls. Broadway. Don't fall in love. Okay. So first of all, let's just discuss the fact that from 4 to 6 is still quite a nice percent gain. You know what I mean? Like in terms of relativity. From 4 to 10 in 1, 2, 3 months is incredible. You know, it's like almost 200%. No, it's over 200%. It's like 230%. So these things happen, but notice like the time, and this is the nature of the short game. Notice like how as it goes up, it kind I mean, I don't want to say grinds, Brad, but you can just kind of feel what's happening here, you know, because it's digesting a lot of information, going through various things. Like this is a nice volume move here, but it's like these guys right here have been selling since here, and look how fast it gave it all away. 1, 2, 3, 4. 4 days to give away 2 months. This is the nature of the short game. And what I want to say is that, you know, the first thing is do not be afraid. Okay? Do not be afraid of shorting. Shorting is simply the art of selling something you don't own first and taking the money knowing that you just will have to buy it back. I know that it sounds so counterintuitive, and by the way, Brad, you know it's one of the worst things that I think exists as it relates to short selling for us is whatever the hell they do in real estate, it's called short selling.
Completely I mean, it's not the opposite, but it's just so different, right?
Well, it's so different, and it, you know, having friends that have, like in real estate, it's like you're always losing. When the person is short selling their house, they're always losing because the short part is the part that I guess how much the difference between what you paid and what you're selling for, you're short. But in terms of the stock market, it's not the same thing at all.
And I don't, you know, Dan, I don't even know that you need to fully get your head around the concept of not owning the stock, borrowing it, and then buying it back at the end. It's really just playing the opposite direction of the long side, right? You're betting that it's going to go down. Right.
And I mean, what you're saying is exactly what I want to reiterate. Part of the problem, I think, exists in that there's this desire by people to overcomplicate things from time to time. And like they have to, well, where's the stock certificate? Who owns it? How do I own this stuff? How can I sell something without owning it? But the funny thing is the mechanism for that, it's all automated. You don't need to think about anything other than the fact that you got some money first, and then you have to use that same money to buy the thingy back. And the question is, are you going to, you know, buy it for less or buy it for more? It's that simple. So the short side is a very, very good side to think about, to wrap your head around. And I guess I wanted to kind of say this, Brad, that the way I look at the market is thus. It's definitely rigged to go up. Why? You know, people will say, well, first of all, you know, the whole Western civilization to some extent is dependent upon the equity that exists in the stock market. Everyone's vested interest. You know, when the U.S. basically destroyed itself in the 2008, you know, we sort of repainted ourselves right back up and, you know, made it all happen. So it's rigged to go up. Insurance companies, when they take your money every month because you're not sick, that money has to go somewhere, and it typically, you know, gets sent to funds that then invest that money, much like a 401k. So there's a lot of that going on. Money has to be put to work. It can be put to work, of course, in bonds and other things, but stocks are a huge place where money gets put to work. The short side is basically finding what you believe to be supply-demand inefficiency. You know, like in this case, in the case of Broadwind, there's just too much heated demand. Like some of the people that wanted it really badly here didn't really want it that bad, because when it started to go down, they panicked and caused more selling. So like that's why all of this got erased. And now we're kind of like, you can almost erase it completely from your memory, Brad, and we're right back in this area where I am actually, you know, bidding to see if it's at a support level because it came so quick. So this brings me, Brad, to the other topic that I wanted to discuss, which is the delayed gratification and how critical it is to the art of speculation, especially as it relates to trade ideas. You know, specifically in the Q&A section, I want to, you know, focus on showing everybody what's actually done versus diving into formulas and complicated things. I want to keep it simple. You know, we do lots of the other stuff too, and there's tons of forum elements where you can see it. And my goodness, on YouTube, we have so many channels dedicated to the various things. But here, when you have myself and Brad live, what I like to do is I like to show you, you know, how it's done by professionals and how it's done the right way. So Brad, one of the things that I've done here, let me pull up this window. Where the heck did I put it? So specifically for this webinar, what I did was I erased all of my working price alert windows. Not windows, alerts. I wanted to start from scratch on this Q&A section for everybody's here so that everyone gets something special. So what we're going to do is we're going to show you how we do it, make it so that it's super visible to everybody. Let me shrink this up a little bit. I'm actually going to minimize this just so you can kind of see the work process. Okay, so here we have Broadwind, and obviously I missed the short because I wasn't short. In fact, I traded it on the long side a couple of times, but now it's back to this level. So what I would say here, I'm going to show you, is this is at support. Get in here and exit 5.85. So here I'm going to say, like, so that it's not immediately triggered, I'm going to say, let's say 601. Okay, save. So now I need to edit it because Brad wasn't watching me, and because I'm going in a direction that's negative from where it is right now because it's lower, not higher, the software kind of thinks that I'm selling a breakdown, which is the common behavior that most people do. But here's where I want to show you in our alerts. You simply switch the direction. Okay. So, and here you can even, again, switch what you want it to do. If you want it to rise to, or here, in this case, it's coming to me, or if it's going to rise above. So I'm going to hit save, and the direction changes. And now I have my one window that is going to show you what's going on. So this is for Broadwind. And I'm going to move this chart, and I'm going to go through just a couple of more names, and then I'm going to change channels, and I'll bring that window back. So this is our after, let me go to the after hours. Oh, Brad, you forgot to tell me not to leave my window without pinning it.
I can only help you so much.
I know, I'm pathetic. All right, so, but this is also a good example that whenever you do something, it's always in the cloud. So here I just loaded the window. Now I'm going to pin it so it doesn't go away. So here, my best practices is I look at information, and when I see something, okay, and I see something like, let's say, that's critical or interesting, I will make notes. Here, I see something in Sun, and there's nothing that says, Dan, do anything.
So
Okay.
Dan, as a little kind of side note here, Nicholas was asking a question about this particular channel here, and he was kind of curious what we're looking at. And I just wanted to point out two different metrics that Trade Ideas is looking at on this channel here, and that would be the change in the post market. So it's looking at how much a stock has moved specific to the post market, and then it's also looking at post market volume, that window over on the right. So both of those are giving you a flavor of things that may be happening in the post market right now.
So here, Brad, and again, Brad's kind of really doing a good point of showing you that you can really, as an end user, quickly look at our data. And let me, Brad, we should make it, I think, like this so that it's already done. But here, for example, this is the change from post-market, and I believe it's the column that mostly exists in Trade Ideas. I haven't seen it in too many other places. But here you can see FIVN is up 11%. I don't know what this thing is. Frontier Communications is up 10%. Delta Tech Holdings is up 10%. And you can see by just double clicking what's going in the other direction. Well, here's B-Corp getting annihilated. Cake down 9%. Here's one that was up during the day, LNTH, but down after hours, 7%. So it's very easy to do this. And again, notice we have one for pre-market, and of course at the bottom you've got the post-market. Our channel bar makes it easy for you to kind of just peruse through things very, very quickly. But what I want to do now, Brad, is I want to kind of go to the price movement down section, okay, and kind of talk about the various ways that you can explore shorting. So one of the things that I like to do, okay, is I like to do things a little bit differently than everybody else, and it's just a strategy. So again, this is not the only way to do this, but it's just something for you to look and see and see if it fits your trading style. So in this particular example, what I'm going to do is, to the tune of that delayed gratification, is I'm going to short things as they come to resistance. Okay. So here, just as an example, on SBLK, you can see how it kind of broke down, but if it comes back up here, which, you know, here it was breaking down and then came up here, this was the price resistance. It just made a lower low, but it could come back and test it. So I would try that again, and I'm going to say, let's go short. It is at resistance. Okay, so now you can see short SBOK, long BWEN. The symbols, to me, by the way, are not that relevant, because again, I like the fact that they're traded publicly just means that I can already do sort of what I need to do, just from the point of view of not worrying too much about, you know, well, what does this company do and how long am I going to be in it? You're only going to be in it a lot if you're up. That's the only reason to ever be in any stock. By the way, Brad, maybe the best piece of advice anyone's ever heard in finance. Okay, so let me repeat that, because I like it so much I want to hear myself say it again. The only reason to be in any position in a stock, the only reason, is if you are up big. If you're not up big, there's no point in being in it, because it's a waste of opportunity cost and it is a waste of your capital. So that's the best rule of thumb. Well, Barry's going to steal that. Now he's going to use it in his room, tell everyone he came up with it, but it was my idea. Okay, so let's go back to, here's another one, MCRB. Okay, here it is. It tried to come up to this level before. You know, it might do it again. So I'm going to go right here and I'm going to say probably won't get through. Short. So again, see, like, you're basically getting ready to, but you don't need to do it right now. That's the whole thing, like, about allowing sort of the market to come to you. And it's really easy to do when you take the need to trade today out of the equation. Like, here's something interesting that I look at. Like, I personally, because let me just show you. Look at this thing, PCYO, okay? Water supply irrigation systems. I literally know nothing. I mean, it's doing well, but it's also gone from 566 to 760 in 1, 2, 3, 4, 5, 6 days. That's a very, very aggressive, big move. I am not afraid, by the way, of trying to throw a short out when I see negativity. And I don't see it yet, but I'm saying, but if I do, because let's go back to this. I mean, you have these moves that are then followed by something like this for 1, 2, 3 days, you know, nice negative move. Again, I'm not saying I'm trying to call it, but the whole idea about successful investing is that idea of trial and error. Trial and error on the long side or the short side. When you're married to having to need to be right for whatever reason, it really closes the opportunity door for you. Again, look at this stuff. Like, here's an example. And again, some of this stuff isn't necessarily shortable, and obviously we all would have loved to have caught this move. But if you recall the things that we've shown you before, okay, look at this Paul matrix. Look at this incredible move it had, followed by, look at the move from here back down to here. They happen. You know, the question is just when. So I look for this information. So to me, I'm like, oh man. So like, for example, I can set something up right here and I can say, get short a little and cover at new highs. Again, guys, the things like that you hear about, Goldman, for example, and I saw Leonard's comment about when Goldman says it's a buy or whatever, forget all about that. By the time Goldman says anything, it's already pointless. Goldman was saying it was a buy here, and here, and here, and here, and here, and in here, okay? It has no short float. I'm not saying to do it immediately, but I'm just saying that you ought not be afraid to try, because all you need to do is, if you're wrong, just quickly get out and move on to the next trade. That's the whole process. Move on to the next trade. Okay, let's go to some of the stuff that's been a lot, on social media, being talked a lot about, and here's another perfect example. So here, you know, what I would say is, it won't get through, but if it does, I am out quick. You know, you kind of give yourself some mnemonics. Look, I mean, it's sort of like, this is a tell a little bit, okay? And these medical stocks, you know, this is where you want to kind of test and see what the volatility is. And again, I don't even know if
there's nothing wrong with setting a couple price alerts, right? So you've got your short right there, but if that thing breaks out a little further to the upside, maybe you want to get long. You know, it's just, it's really flexible from that regard.
Absolutely. And you know, Brad, it's like, this is why I keep trying to reiterate that if you remove that mental of needing to be tied to a direction, then you kind of let everything come to you. Like here, for example, Piedmont Office Realty, I can say, well, you know, this thing is right at support. I mean, I'm just saying, switch it up. Now it's coming, let the down come to me. It is coming to me. This is a completely different approach than buying the breakout. You know, here, look, you know, this is a breakout buy and you're hoping that you get it right. But here, when it fails, you know, that's a significant move to the downside. And the whole idea is that when you open yourself up to shorting, you really open yourself up to a whole new framework of returns. Because otherwise, you know, you simply don't even see any of it.
I think, Dan, I think by understanding the short side, it's so beneficial to the long side. It's so beneficial in getting, in buying stock on the pullback and understanding the way stocks breathe. And it's never a straight ride up or a straight ride down. And so just having that understanding is so beneficial.
Well, Brad, it's also kind of, you know, again, going back to the game you and I love, hate, golf, it's kind of like a matter of practice. Like, how could you really succeed in golf, like, for example, if you can't get out of the sand trap? Now, obviously, sand trap game, I mean, how many sand shots are you going to hit? Hopefully not many, because you're playing it right and, you know, you're in the fairway. But as we all know, from time to time, what happens? You're in the sand trap, right?
From time to time you are.
Right. So, and I think, I mean, to me, it's actually kind of a beautiful metaphor for shorting, because the amount of time you spend on, like, should be about the same. Since the market is rigged to go up, you know, most of your opportunities will tend to work out more on the long side, again, just because of the nature of the game. But through its negative shifts, you want to have the skill set to play the downside, you know, the sand game. And the best way to do it is by letting the things come to you. And that's really what we're pointing out here. You know, we're just kind of giving you examples of various things that you can see where, wow, I need to be aware of the short side. I mean, Brad, here's your other example. No breathing room here. You know, you rode that beautiful sprint trade. You picked this bottom, this support bottom perfectly, didn't you? You bought on the low tick right here. And you've been in it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days riding high. And then, you know, that's the short side. That's the benefit of being able to play the short side. There were people short sprint who were able to make serious money. Again, another example. So here's one, and I'm just going to say it just right here. So look at the top of this range is 1670, right? So I'm going to put in right here, sell this here and buy back at 0.75. Okay. Do you see what I'm doing? We've seen, so Barry and I, and for many iterations, Barry and I have talked about the psychological aspect of the gap, the consolidation and digestion of information, this beautiful smile curve, and here it is, it's at the void. Now, as Brad says, by the way, right above here, okay, I was wrong. Let's get along. This is the beauty. You know, this is your decision track. And risk analysis has to be in both of them. But the idea is you short it here, hope for the pullback to 14, but if not, you exit here, but you reverse. Brad, you know, what do we have in Brokerage Plus? I mean, this is one of the things that we talk about. Professionals know how to not get emotionally attached to direction, but just get emotionally attached to P&L. You want to ride
the reverse button that we have in Brokerage Plus is really just that. You can't be afraid of being wrong, and a lot of times if you are, you just switch it, right?
Yeah. So let me show you this. I'm not connected right now, but basically in Brokerage Plus, which is what we use to let our customers who trade with interactive brokerage execute automatically, we have this beautiful little button called the reverse. So imagine this, just for a minute. Imagine I am short MNTA here, like 200 shares. It's just something that you can believe in is not that scary. So at 230, I'm short. It goes down to maybe even 1544, and I'm thinking, because again, I'm thinking that's awesome. Maybe we're going to 14, or who knows, maybe even 13. This came down in the first place. Just psychological stuff, you know, it's going through. So you're winning. But then next day, some positive news comes out. You're negative, and it goes to 1681. I think I said the stop, but where did I put it? MNTA. The long was 1685. So right here. Okay, so above there, what I can basically do on Brokerage Plus, when I see that position, as my P&L goes a certain negative, whatever, what is this, 85 cents. So on 200 shares, I'm almost down $200. I basically hit reverse. So I cover my short and I go long because statistically speaking, now we're potentially going to 19 and who knows what after that. There's nothing, this is, again, this is having that open mind, the flexibility. This is what makes the professional speculator so much better than the amateur, because he doesn't emotionally, you know, get too excited. Notice, by the way, Brad, I mean, and we've talked about this again quite a bit. Notice that when you watch professional poker tournaments, first of all, you have guys that got earphones on, hoodies, and eyes. And like when they win the pot, do you see them raising their hands in victory and going, fuck you guys, I won? That doesn't happen, because they know that getting all excited about that, that's the wrong thing. It's all about process, right? Just like in golf. It's not really about the score, although you want the score to be good, but you want to be doing the right stuff, managing the game. Trading is the same way. It is a process thing, a feel and science thing through process. You short resistance, you can get long on the breakout. You can do both if you are not confined to needing to like something. So this is very, 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 very important. Okay, so I'm kind of just going through things here so that I'm going to share these, of course, with everybody who's at this webinar, just so that you know. And I'm basically trying to look at things that look to me like, you know, they could be shortable. By the way, here's Groupon. God, this thing is so terrible, Brad. But it had that nice gap. Like if you look at it over here, you know, look, it had that nice gap go right in this area. Though this is the resistance, man. That was a great short, like 1, 2, 3, 4 days to short here. And look at where you are now.
Well, that stock does not entice you to hold it, does it?
No, not at all. And that's the thing, guys. Remember, there's so many of these things that fail. Open yourself up to the downside. The dark side in trading is the good side, because you're basically getting rid of scammers. You know, that's the beauty of it. Okay, so here's the New York Times. Now look, I have no earthly idea, nor do I care about how much they do or don't like Donald Trump. But what I do know is they are at a resistance point. Now, they could break it easily, but what if they don't, like they didn't last time? Last time they didn't. It spent 1, 2, 3 months not breaking it. Now, again, without reading the news, and maybe somebody just bought them out, although I doubt it. But here, I'm going to put in a short. This is the top, it looks like. Save it, and you can see why. And notice again, I would just get out after it made a subsequent high because I don't need to be right. I'm just process oriented. I'm playing it by process. It's kind of that simple. And you can sort on the different things, by the way, to kind of get them to things that you really, really like or don't like. You know, like for example, here we're looking at stuff that's, let me sort it by stuff that's traded a lot. So here, AMD, beautiful, beautiful, not beautiful chart. So here again, this is kind of tricky because in this particular case, you're at support. So with AMD, what I would kind of say is, you know, here's what you could do. This is just like, it's called the whole number short. Yes, it is. Okay, so what I'm doing here is I'm supposing, and notice we're kind of looking at 2 gaps. This gap from January, and whatever happened, all that got erased. I mean, think about the time, right? All that beautiful blah, la, 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 that was going on. I Dream of Jeannie just went dee, and boom, it's all gone. Did it really happen? Nobody knows, but there's a lot of psychology here. These people are pissed. Now, what they don't want to see, Brad, you know what they don't want to see? It going here or here. So there's a lot of fear, and when there's a lot of fear in the water, that's where we, the efficient speculators, you know, that's where we come in to capture alpha. I mean, that's what we're here about. That's why you guys are listening to me talk. So what I'm showing you is simply kind of such a critical mindset and art set of get rid of your predisposition to needing to like a side and practice the process of visual, you know, wave writing. So here you can see, notice like we're close to these capitulation areas. This was support, but now this is resistance again. So I'm basically saying if it comes to me, comes here, it's going to be tested, and if it fails, it could keep going down. But just as we have done before, let's not miss the long side either. Things don't look that bad. Because, again, it's filling in this gap. Ladies and gentlemen, these are the basic things. These are the proper methodologies of utilizing trade ideas. The idea is to let things come to you, and then what you're going to be doing is, if that's the case, you can go to your price alert windows, okay, and you can look at the ones that have triggered. So I'm going to open these up. And you can see, so these are the ones that I've had triggered since January. So since January, on all the alerts that I've put in, okay, I have gathered a total of 77 points. That's how I know I'm kind of doing the right stuff. This is what I'm the best in, and here's what I am the worst in. Okay, you can't even see some of that stuff because it's so far below. Okay, here. So that's how I manage, all of these things. Like if you want to know how do I get into stuff, and by the way, Barry's the exact same way. Our homework is creating these triggers, these events, and then managing them. So what I'm doing now, what I'm going to do is I'm going to erase all of these. So this is one of the things that I do from time to time is I completely clean house. I already know, for example, that I've collected those 77 points. I've traded, this is since the beginning of the year. I've traded, that's how I've made my money. So now what I'm basically doing is I'm leading by example and just showing you me starting the process again. I've got rid of the stuff that I was in. Now it's all empty and I'm starting over, and this is what I have. So Brad, I want to, on the closing, okay, I want to kind of talk a little bit about why it is that we even brought all of this up. Why was this so important? So over the last few days, Holly, our AI, which I haven't spent too much time on today, has been producing on the short side. And we have, again, several different ways that it does it. One of them is this strategy called not a double bottom, where it basically breaks through some sort of level. Okay, there's another example of that, not a double bottom. The AI knows, and again, not everything works, but the AI statistically over the last few days has been showing us that there's significant money to be made on the short side, and it hasn't been doing that that often. So I really wanted to make sure that all of you kind of understood what the short side looks like and how to professionally kind of approach it without the emotions of wanting to be the next Citron and getting all excited about, whether you do or don't believe in a stock or whether it is or is not American. By the way, there's nothing effing more freaking American than short selling. It is the American way. And don't get me started about the capital gains tax. But Brad, I feel like, again, that's, for me at least, this is a good segue to get back to the presentation and, kind of just round up things with this, which is, first of all, today, there is a new version, I think, that we just released that fixed, again, to the tune of Q&A. We just released a version that fixed a bunch of price things on Brokerage Plus, like some data issues. And while Brokerage Plus is in beta, it is free for everyone. Free, 100% grandfathered in. You will never be charged for it for those of you that ever plan on using it. When it does launch, it will cost $1,088. So we've been saying this since the beginning of its launch. The early adopters still have the ability to just simply get Brokerage Plus for free, and it's free with your premium subscription. So that's basically how that works. Recently, we have started doing a podcast. We have the Friday After Market podcast with myself, Jamie, and guests, and we would love for everybody to, tune in. You get it from iTunes. We try to put, again, it's more of the weekend take on what's going on. We talk about a lot of psychology, a lot about just the approach to the game. This is one of the best things you can do in your life if you can do it, because it is the freedom to do whatever you want. Trading, for those that can do it, it's better than being a professional athlete, because a professional athlete still has to travel and do games and all that stuff, whereas with trading, you come in, it's all you, it's the market. When the market's off, you get to do whatever you do. As long as you can deal with the consequences, that's it. So join us on this podcast. Scott, do you want to pop in and finish up with the pricing and all the discounts?
Well, sure. Yeah. Thanks for making sure to plug the podcast and update on Brokerage Plus. Everyone needs to know that kind of stuff. We also have a promotional code for you, and session, all caps, like you see it on the screen, is the code. You can also grab a handout that includes some of what Dan just talked about in the handouts panel. So just find where it says handouts in the little sidebar on your GoToWebinar interface and expand it. You can download that document. Session is good this month for 15% off your first month or year of trade ideas. And remember that both standard and premium include a full hour of one-on-one training. So in addition to all the help videos and the free trading room that we have, there's also a full hour that we'll spend with you to get you oriented and help you out to get going with trade ideas. It's the best onboarding possible. You can email any questions to info@trade-ideas.com. That's the best place to send them. It goes directly through our help desk software. If you have a question directly for Dan or Brad, you can email them Dan@ or Brad@. Trade Ideas 1 is who to follow on Twitter for Dan Merkin's commentary. @Trade Ideas is our standard account. We have some other ones too you'll find if you follow us. Facebook.com/TradeIdeasPro. Find that page on Facebook and like it. Then you can share what we post with your friends. We post some different content there now and then. The recording should be up in a couple of hours. You'll get an email reminder tomorrow. It'll be in one of the webinar playlists. Thanks for attending. Thank you, Dan. Thank you, Brad.
My pleasure, Scott. Thank you, Brad, once again. And everyone, thank you for joining our webinar.
Yeah, have a good afternoon, everyone. Bye.